as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Welcome to this Stockbox interview with Scott Kaintz, the CEO of Corcel plc. And we're also joined by Christian Yates, who's the chairman of Gresham Renewables plc and also the director at Wearsdrow Development, which is the vehicle that is developing the Burwell project, which is now 100% owned by FGS, that's Flexible Grid Solutions, which is a subsidiary of Corcel. So, welcome to you both.
Thank you. It's great to be here.
Thanks for inviting me on.
No, it's good to speak. It's nice to be speaking to you, Christian. Someone new we haven't spoken to before with regards to Corcel. So, can we perhaps start with a bit about yourself, your background, and how you came to work in this sector?
Yeah, I've been active in the fund management world, I suppose, since 1988, and had a number of different roles and focused on different asset classes, from traditional equity, debt, emerging markets, money markets, and then hedge funds and private equity. But since 2009, I made the shift and started working with a team investing in clean tech and renewable energy infrastructure. At that stage, it was largely ground-mounted solar farms. So I've been, I suppose, in UK terms, I'm a bit of a veteran in that I've been active in the space for quite a long time, over 10 years now. And I was a co-founder of one of the first listed investment companies investing in renewable energy. The structures of venture capital trust in the UK, but listed on the main market in London. And that has proven to be a very successful investment for investors. It is a mature portfolio of assets, but it's interesting how things have evolved. I mean, if I look back to 2010, just by way of example for your listeners, in 2010, we were, a large ground-mounted solar plant in the UK was probably about 5 megawatts in size, occupied about 30 acres of land, give or take, depending on the location. But it was costing us to build at that time probably about £11 million, around that figure in 2010, 11, 12. Today, a similar sized plant would cost probably about £4.5 million. So it shows how the costs have come down over that time. But of course, in those early days, what was particularly attractive to investors to invest in these assets was very high levels of government subsidies in terms of the feed-in tariff, which were 25-year index-linked subsidies. Now, those subsidy regimes have gone, and now we're looking at investing in renewable projects subsidy-free and still making a respectable return for investors. So I suppose I've ridden all that history and see how things have changed over that time. But also outside of that, I've been involved in my broader sort of interests in financing wind farms in Scotland to looking at waste to energy projects in the southwest, involved investing in some clean tech companies as well, be it wind turbines, advanced building materials, tidal wave energy, lots of things like that, some of which have been more successful than others. I mean, very early stage investing for a lot of investors.
Great. Well, thank you for that. That's good to hear your background there. Obviously, you're very experienced in the energy sector and in renewables, which is fantastic. So can we talk now about the Wearsdrow development and how you see the opportunity in the Burwell area? And also, can you remind everyone as to the basic details? What are the basic details and plans for the project?
Yeah, well, we have secured a 100 megawatt grid connection, which is quite a sizable grid connection. And it's quite interesting as well that it's import-export as well, which is important for battery storage as well, because battery obviously needs to store energy and export it to the grid at certain times. It's in an area of the country in Cambridgeshire where there is, constraints on the grid and energy, so there is high demand for other sources. And there's, the local council and other authorities in the area are very, willing to embrace renewable energy generation in that area. So it's a good place to be. and there is demand for it. So we, as I mentioned, have secured this grid connection, which is for a 50 megawatt solar plant, ground-mounted solar, and then a 50 megawatt import-export battery storage plant. And it is outside a village called Burwell, and it feeds into, the grid connection is into a major substation in that area.
Okay, good. And how do you see it fitting into the opportunity in this space in the UK energy and flexible power generation? And what's the market looking like in the future, 2021, this year and beyond?
Well, I think that there is a significant commitment to renewables and increasing generation from renewables in the UK, Europe, and also North America as well, with significant incentives in place to assist in that transition. I think the UK's made significant commitments to reduce greenhouse gases by 80% by 2050 compared to 1990 levels, as well as signing obviously the Paris Climate Change Agreement in 2015. One of the issues about renewable energy sources are that they are generally intermittent, be it wind, obviously, because in consistency with wind, and solar, the sun doesn't shine, irradiation levels fluctuate, far less so than wind fluctuation. It's far more predictable in solar. But what that all does is increase the difficulties in balancing demand and supply of electricity and feeding it into the grid. And therefore, what I'm excited about battery storage is that battery storage systems can help maintain the stability of the grid. And so they have an increasingly important role to play as the percentage of renewable energy generation assets increases over the next few years.
Okay. And FGS, or flexible grid solutions, the way it works, as I understand, is you generate electricity either, as you say, through solar or through I guess importing it or buying it in, storing it in batteries, and then releasing that energy from the batteries to the grid when demand is created, when a peak is demanded. Is that right?
There are a number of different payment sources here. As I mentioned, sort of talking about balancing the grid. One revenue stream is obviously frequency response services, capacity market services. These are all mechanisms put in place by the national grid to assist with the demand and supply and stability of the grid. And for having availability and being able to export electricity when there is need in terms of balancing the grid, there are attractive payments being offered. And those are things that we would lock into for some time. So that is one source of revenue. I think what is really interesting now and what's developed over the last couple of years, and we've been talking to a lot of what we call aggregators, is the revenue opportunities over the coming years of making market arbitrage, i.e., as you just indicated, buying electricity, wholesale electricity from the grid at points where there is low demand during the day at a lower price, and then exporting it back to the grid at other times of the day when there is higher demand and higher payments. And those revenues are now becoming increasingly important. And that is particularly attractive to a lot of investors as well, because you're not really reliant on wholesale power prices, which many of your listeners may be aware did fall quite significantly last year, have been rising slightly since last summer and are fairly stable. But it is something that traditionally a lot of investors look at when looking at the sector, is seeing where power prices are. So introducing battery storage into an investment portfolio makes it very attractive because the revenues are, as I said, are detached. So it's really a hedge.
And does it work? How does it work? I mean, is it literally on and off? Can it be that quick?
Yeah, I mean, when you import yeah, absolutely. Yeah. You import electricity when there is demand. It's determined by your aggregator, and there are a number of these firms. And Scott, I know, has been talking to a lot of these firms and may want to elaborate a little in terms
everybody's
of
got different trading strategies. Some of those firms are going to specialize in some forms of trading, more the wholesale market. Other ones are going to want to do more aggressive trading. But yeah, I mean, there are times we can get paid potentially to take power out of the system.
Right.
I mean, You can even see that as an individual now. If you sign up with some of your power companies, they will pay you to use your dishwasher and washing machine at 3 in the morning sometimes, because they're getting paid by the grid to reduce some temporary oversupply. So we could be in a situation where we're taking power out of the grid, or even being paid for it, and then selling it back in at prime time the next day when everybody comes home from work and turns on their ovens and things like that. So the nature of that opportunity, I think, is expected to change. The next few years, we're expecting ancillary services, and some of which Christian already mentioned. These are these sort of more temporary type things to dominate. And then over the midterm, we expect the grid to become a bit more mature, to stabilize a bit. And that's where you get more into the more traditional wholesale market, and prices will matter a little bit more. But I can certainly say, in talking to these guys, that the opportunities are huge. I mean, I look at what we've got in our current financial models and what they were trading these batteries at over the last 4 months. And let me just put it this way. I mean, they were getting returns 3x what our baseline is. Okay. So, I mean, the opportunity here is very significant. And the quicker that we can bring this into production and energize it, I think the better for everybody. One of the big things we're looking at, of course, is duration of battery. And for your listeners, that's the length of time that how long we can put our max power out. Traditionally here in the UK, most batteries were relatively small and relatively short duration. And as we've developed this project, we've been sort of trying to figure out where the sweet spot is, because obviously it costs a little bit more to put a longer duration battery, like say one that could last 1.5 to 2 hours at max power. But the mid to longer term returns look very attractive, and we think that's kind of where it's going. So that's been one of the challenges, in Christian and the rest of the team. We've all been, sort of trying to get to the bottom of that as we finalize these plans and look forward to moving into financing and construction of the project.
I think just to add to that, one thing that is important looking at battery storage systems now is the reduction in costs. I mentioned earlier how the cost of solar photovoltaic ground-mounted systems has come down dramatically over the last 10 years. I think what we've seen in the last 18 months, 2 years, is the price or the cost of batteries coming down quite dramatically as well. And that has made these battery storage systems all the more attractive because it really helps drive returns. Okay.
Now let's just look at maybe the bigger picture here. Of course, we've had the election of President Biden in the United States, who's sort of elected on a very much a green initiative. The UK's net zero target by 2050. So how do you see this sector developing? I mean, how many sort of current flexible grid solutions are there out there? Do you see more coming online? And what about investor appetite, do you think, to fund these projects?
Well, I think the backdrop in Europe and the UK is enormous, and also in the US. I mean, the policy backdrop in the US, obviously that's going to get a turbocharge, we reckon, with Biden coming in as the new president. But there is a $2 trillion backdrop of subsidies and incentives to move people towards clean energy in the US. So that is very supportive, and that helps us, I suppose, in the UK by bringing the cost down of the technology as well, the greater the demand.
Yeah, I mean, I couldn't agree more. I think the decarbonization angle is just huge. It's going to happen. I think the Biden administration is going to make it happen even sooner, and I think we're almost perfectly aligned with what Boris, as outlined as the vision here in the UK. These things are going to happen. They need to happen relatively quickly if we want to hit some of the more important climate goals and targets. And our project and some of the other projects that we're looking to develop behind this one, I think fit into that motif perfectly. And I think when we talk to our investors and more broadly around the city, and Christian may want to comment more on the fund side, investor appetite for these sorts of projects and this kind of strategy is as good as it's ever been, and it's extremely hot. I mean, it is obviously the right place to be in. And on a broader basis, that's what our flexible grid solutions arm is for. I mean, that's what Corcel wants to develop on this side. We have exposure to battery metals on the other side of the mining side of the business, and the other side of Corcel. But FGS could not be more perfectly positioned, I don't think, at this point. And I think Christian and the team at WDD in this project and other projects that we like what we are working on in the background to slot in behind this, I just don't think could be better positioned both for our investors and to meet these sort of larger goals.
Yeah, I think it's a good point, Scott. And just to give you some background and context of investor demand and appetite in the UK. There are, I believe now, I think it's 15 following the recent launch by Downing just before Christmas, 15 investment trusts listed in London investing in this space. Some of them have been long established, people like John Lang, Bluefield Solar, the renewable, Trig, Octopus. These are all sort of fairly familiar names to a lot of people. Gresham House, battery storage is one of the first in battery storage, Gore Street. Extensive number of opportunities now for investors. But the sector, all these funds, I think bar one, which is US Solar, are all trading at premiums to NAV. And that is the clearest indication of the appetite and demand by investors for this asset class. Also, we've seen that top-ups and new issuance has been sometimes 2 or 3 times oversubscribed for the more successful funds as well. And there are new product offerings coming to the market quite shortly this year. And I believe from what I'm seeing is there's probably about $1 billion being raised. Now, the interesting thing, all these funds, or most of them, don't have their own development arm and don't have their own proprietary projects which they can invest in. So they all have to compete against each other to acquire assets. So, I would say that what we're doing at Burwell with WDD in this one site will have huge attraction for these funds. Should we not wish to hold this project long term, or wish to seek co-investors in these projects?
Okay, and how long then until the project is online? What stage is it at now?
We're quite advanced in development. We've secured the 3 elements that you need to do to actually move towards what we call being shovel ready. One is securing the grid connection. That's arguably the most important thing you need to do. Securing the site, which we have done, and we're hoping to wrap that up in the next week or so. Okay. But we've been in discussion with the landowner for some time. That's for the battery storage. The solar project may take some further time, because 50 megawatts of solar, you require quite a lot of land to do that. And it probably not be all, it won't be all in one great field of 200-300 acres. We will look at 3 or 4 different pockets potentially and build it out probably at 5, 10, 15 megawatts a time. And we've already identified 3 sites. We've been in advanced discussions with landowners on those. So the solar will probably come on after the battery, but the battery, we would hope that we'll be in a position to get to shovel ready. We need to make some amendments to the planning following a slight redesign of the plant and the exact location of that plant, which we hope to have done by May. So we would hope to be in a position to seek financing and funding to start build out of this site at some point in the summer. Probably be from the start when you break ground to actually energizing 9 to 12 months.
Okay. Thank you for that. Now, just a final question, Christian. Of course, with Corcel, it's very much a sort of cradle to grave model. They've got battery metals in the ground, and of course, the project at the other end actually delivering the solutions there. And we see you're set to become an investor in Corcel as part of the buyout. So what do you think of Corcel's unique offering of having battery metals in the ground and exposure to the flexible grid generation and storage, such as the site at Burwell?
Yeah, well, I just want to correct you that I am currently a shareholder in Corcel.
Okay.
But I hope to increase my holding in Corcel, as you rightly mentioned, as the project comes online, which is exciting. And I think that will, I'm looking forward to the uplift in the share price over time. I think it's a fairly unique business model, isn't it? I mean, you're trying to cover all bases here and benefit from the whole chain, from sourcing the metals that go into batteries to actually deploying batteries and benefiting from the revenues long-term revenues can be generated from that. So I think it's a differentiated strategy. I cannot see anyone else taking advantage of this opportunity, and I think it's exciting. So I was happy to invest. What was it, Scott? Back in May?
Yeah, the original investment was in May when we first got involved in the project, and as you say, we're set here to. Well, you're set here hopefully to become a larger part of the investment.
Well, thank you very much, Christian. Scott, any final thoughts from you?
Yeah, I think, stepping back for one last sec on flexible grid solutions. I mean, our strategy, I think we've outlined it, is to really use the public listing to sit between small developers who run around the UK, identify sites, and maybe don't have that access to capital. And some of these larger institutions, in part, of which Christian's involved in, and which often want to write very large checks. I mean, some of these groups, they're looking for massive portfolios and they want to be in the hundreds of millions. So I think we feel the opportunity for Corcel and FGS is a unique one to kind of sit between these two sides with a certain access to capital via the capital markets and key investors here in the UK. And occupy a very interesting space, between these two large groups. Our goal, I think, is to scale this, FGS up as quickly as we can, so that we end up with a deep portfolio of projects that are throwing off cash, in which we have sort of residual stakes potentially of various sizes, and we get development fees along the way from developing these projects. So our goal is to move this quickly. We think the time is now to strike while the iron's hot, and while everyone is perhaps starting to move beyond some of the focus on downside protection and gold, and move into to expanding this business and making it a very meaningful part of our way forward.
Okay, well, Scott Kaintz and Christian Yates, thank you very much for your time.
Thanks, Mark. Good
Thank
to
you much.
speak with you. Pleasure.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.